Hey everyone, welcome to the quarterly recap here at Tolmiros. A little bit of activity going on in the world here. Obviously the conflict in Iran upsetting the markets a little bit here in 2026. I will say though, beginning of the year, markets started out strong. I think the biggest story, even still to this point, is that diversification is really helping our portfolios. S&P 500 getting all the headlines. But international stocks, again, this year outperforming. Small cap and mid cap stocks here in the U.S. outperforming the U.S. large cap counterparts, and then bonds holding in well, largely flat, even given the recent volatility. So diversification's been key.
Yeah, and none of those are reflected in the S&P 500. So even though we take a look at the S&P 500 as a good barometer for markets, the parts of the market that are behaving really the most calm in this volatility aren't even in that index. So,
yeah. So it's be interesting to see how this conflict plays out. Anytime we've had a sliver of hope that the conflict is going to come to a close, the market has popped. As of now, it doesn't seem to be a clear resolution in sight. I think what the market is most concerned about, frankly, is obviously oil prices and the trickle effect that has throughout the economy.
Yeah, energy prices and what that does to inflation and what that does to the cost to transport goods, what that does with oil as an input into a lot of goods. So we're definitely seeing the market in peak uncertainty try to figure out, okay, how long will oil prices stay elevated? General rule of thumb is, if 3 months of elevated oil prices, that's when we start to see it really work and matriculate into the economy. So a lot of eyeballs on that right now, still heavily speculation-based movement in markets. And I will say too, under the surface, we see the conflict and it's really easy to button things up into one driving force, but we've also had some pretty lukewarm employment prints. Still some inflation anxiety before energy prices went up, and those have kind of also under the surface created a little bit of anxiety in markets.
Yeah, 100%. And you combine this conflict, and the Fed has come out. Really, there were 2 rate cuts priced into the bond markets. Those have been wiped away, and the Fed is in a holding pattern right now on rate cuts. So. I just want to add, one thing here. These kind of intra-year volatility declines, these are very normal. We see corrections, typically once every 2 years, a correction defined as a 10% decline. So again, obviously last year, right, with the tariff tantrum last April, we saw a significant drawdown and then had a great year. 2020, very similar story with COVID. So this is normal volatility at the moment. And again, managers are, looking forward, staying diversified, staying disciplined. That's always been our approach. That's going to continue to be the case.